Craig and Devon, thank you so much for joining me in studio today as we talk about offshore investing. Where I grew up, people with offshore properties and investments were considered the ultra high net worth because the option just wasn't available to the average person. How times have changed.
Yeah, Sherry, you're so right. I think the exchange control regulations made it extremely difficult for someone to invest offshore, and especially the barriers to entry, the minimums on the service provider platforms, almost made it an option only for the uber wealthy. And yes, with the relaxation of the exchange controls and also the service providers making it a lot more accessible to your average investor to access offshore investing, it really has come a long way, and it really is an easy option for a lot of investors out there now today.
Yeah, and I think something else, Sherry, when you look at your investments, what people tend to forget is being invested on the Johannesburg Stock Exchange, for example, 65% of those profits made by the companies listed on the Johannesburg Stock Exchange come from externally. So you actually have quite a lot of rand hedging in that portfolio without actually even going global, just through the South African or through the Johannesburg Stock Exchange. That's also an important factor just to remember.
So let's talk about the rand for a little bit. There's been a lot of negativity around the rand lately, especially when you compare it against major currencies. And some investors actually view this as motive to externalize their money. Should the rand hedging be a key determinant in whether to invest offshore or not?
So I think, people have very short memories, and I think it's something called recency bias that we suffer from. And, we just need to take a look back at what the rand blew out to back in 2001. It was trading at 13 rand to the dollar. So, had you externalized money then, you would have not benefited very much from rand depreciation, being that the rand is currently hovering around 19. That was 22 years ago. So one has to be careful of, making a knee-jerk decision about externalizing based on currency. So we always try and caution against avoiding a knee-jerk decision and rather look at the facts, look at the long-term trends. We know that the rand typically will depreciate by about 4% per annum against the US dollar and other major currencies, and that's already baked into investment markets. So one needs to just look at the longer term and the bigger picture rather than just making those knee-jerk decisions based on what's happening at this point in time.
What other determinants should be considered when investing offshore?
We mentioned humans have a bit of a recency bias. If you had to look at the Johannesburg Stock Exchange versus the S&P 500 over the last 5 years in rand terms, yes, you would have done better in the S&P 500. But when you look at over the last 20 years, and considering what our country has gone through in the last 20 years, you actually would have been better off investing in the Johannesburg Stock Exchange in rand terms compared to the S&P 500. So it can't be a decision just based on currency. It's got to be a different factor. So for example, it's diversification of your portfolio. If we look at the Johannesburg Stock Exchange, there's only about 380 listed companies that one can invest in on the JSE. So it's more about diversifying your portfolio into sectors that you don't have available here in South Africa, like big pharma, AI, tech. So when we sit with our clients and we look at building their investment portfolio, offshore always is a consideration, but not just to hedge against the rand. It's more to have a diversified investment approach as what we view our clients to be a global investor rather than just a South African investor.
Now we know that, first of all, offshore investing is available to the average person. We also know why we should be investing offshore, as you mentioned, diversification and other reasons. Let's talk about the how part. What are the options for actually externalizing your money?
You have a few options available to you as let's call us a South African investor. So the two we can talk about are what we call direct offshore investing and indirect offshore investing. So indirect offshore investing is very simply where you invest in what we call a feeder fund, for example, where basically you use the license of the service provider and they do their exchange control on their license to then access these offshore investments. And very simply, it's a locally domiciled investment, invested in offshore assets, but it's reported and domiciled in rands. Then the other option is direct offshore investing. And now this is where you actually go through exchange control, where you convert your rands into the foreign currency of your choice and you invest directly abroad in that hard currency. Now, as an investor, you can either do it through a platform that is domiciled abroad. You know, you always hear about, Guernsey or the Isle of Man. But now, again, barriers of entry have reduced. You have companies domiciled here in South Africa that offer those platforms to South African investors, where you can simply transfer your rands into their bank. They would do the exchange for you, and then obviously externalize those funds. Surely
tax is a big factor when you externalize funds from South Africa. Let's talk about the tax compliance requirements that one needs to meet before they can externalize their funds from South Africa. Maybe Craig, you can tell us more on that.
So look, I think you're allowed to take 11 million abroad per taxpayer per annum. And that's a calendar year. And the form that it would take place in, R1 million is considered part of your single discretionary allowance, which is essentially there's no requirement to notify SARS of that. If you want to take the other 10 million, you need to get a tax clearance from SARS. So, failure to comply with that or going beyond the threshold, you could potentially be charged a penalty. Call it a tax, a penalty, 20 to 40% typically. So those are the sort of factors just to bear in mind before you do decide to externalize.
And maybe while we're speaking about tax, maybe just to add something onto that, especially in reference to the indirect and direct offshore investing. It's just important to remember when you invest directly in hard currency offshore, the capital gains tax that you pay when you disinvest from those assets or realize those assets is based in the hard currency that you've invested in. Whereas if you're investing offshore indirectly and it's domiciled here in rands, it's based on rand terms. So you're in a better position from a CGT point of view if you invest directly offshore, because obviously that exponential increase due to the rand depreciation doesn't come into play when you invest directly offshore.
I like your reference to CGT. Maybe you can take us through some of the key differences between the direct offshore investing and indirect offshore investing.
Sure, I think maybe to move into a bit of a financial planning point of view now as well when we look at direct and indirect offshore investing. Something to consider with that direct offshore investing is that since it's invested in the hard currency that you've obviously chosen to invest in, one of the advantages is that you're now aligning your potential future liabilities with your current assets. So what I mean by that is, say for example, you're looking at immigrating offshore, or you're wanting to pay for one of your children's educations in a country abroad, or your travel overseas. You're now investing in a currency outside of rands, where now you're protecting yourself from rand depreciation. And one of the other advantages is that most of these service providers, when you've invested directly offshore, is that if you have an offshore bank account, you can actually disinvest into that offshore bank account, provided that it's obviously in your name. You can't make payments to third parties. Whereas the indirect offshore investing, where you're doing it via an asset swap, typically we would see that more in like your pension funds and retirement annuities, where you're taking up that allocation of 45% that you're allowed to invest offshore. And again, this is just a great way to diversify your portfolio while not having to worry about going through SARB clearance to invest more than R1 million offshore. So two very different components, but both very important when it comes to your overall investment portfolio and financial plan.
Me being Zimbabwean, I have to ask this. So we've spoken about the political unrest, we've spoken about how, the political social dynamics that have happened over the last 20 years, how the rand has performed. And Africa has had these problems as well, generally speaking. I now just want to ask you guys, is this offshore solution also available for the average African investor?
And I think, Sherry, that's the good news. It is, so you can have an investment in SA or globally as a resident of another country. So, things have become a lot easier, and access has been made a lot easier through tech and through, I think, a willingness to make solutions available to investors.